Another stock that was similar, which was Super Microcomputer, ticker symbol SMCI. We put it to the portfolio in November of 2022. We took it out on March 2024. That had a return of 968%. A current open position is Celestica, which is up 851%, and Sterling as well. So what I'm going to do is I'm actually going to take you into those two stocks, and you'll see that despite those run-ups, so we have switched to Seeking Alpha's premium platform. So we're out of Alpha Picks. We're into Seeking Alpha Premium. Many of you may be familiar with Premium. You can see there's a chart here, and on this chart, you can see the price performance over a 1-year period, year-to-date period. The stock is up 181%. Over the last 6 months, it's up 277%. And I think, what is really nice about this is even though the stock is up 366% in the last year, 52 weeks, if you look at the factor grades, you could see how it has changed from what it is right now to where it was 3 months ago and where it was 6 months ago. From a valuation standpoint, the stock has gotten more expensive. So that grade has dropped from a B to a D, but a D is still good enough for it to make a strong buy. From a growth perspective, the company's growth is still just as strong now as it was 6 months ago. Profitability is still at a B minus, just as strong as where it was 6 months ago. The momentum of the stock compared to the sector is actually stronger than where it was 6 months ago. And in terms of analyst revisions, they continue to revise their estimates up for this company, so it's very strong. The beauty of these factor grades is you are one click away from taking a deep dive. So I'm on growth. I'm going to click on growth, and that is going to show you just a whole ton of growth metrics. Looking at revenue year over year, or forward revenue, or EBITDA growth, or EBIT, or EPS, levered free cash flow growth, operating cash flow growth, ROE growth. We have a ton of growth metrics. And the beauty of these metrics, if we go to the one on top, revenue growth year over year, that A minus gives you an instant characterization of the company's revenue growth versus the sector. But we provide the absolute number too. We're very transparent. So the absolute growth rate year over year was 20% versus the sector at 6.9%. So that's at a premium of 196% to the sector, hence the A minus grade that you see there. If you were to look at EPS, year over year growth was at 77% versus the sector at 9.3%, hence that A minus rating. So again, you can use those academic letter grades just to give you an instant characterization of where it stands.